Last week we talked about Australia going into recession in the first half of 2020. It's pretty certain that the first quarter will be a negative growth quarter, given the big shock we've had to exports and to inventories. The question was whether the second quarter would also be a negative quarter. We forecast that it would be, down about 0.3%, but that was before we saw the government stimulus package. We always said that the government stimulus package might be able to avert that recession, but having seen the package, we don't think that's now going to be the case. So we stand by our view that Australia will have a recession in the first half of 2020. We also believe that in the second half of 2020, growth will bounce back quite strongly, and at this stage we're expecting about a 2.2% growth lift in the second half of the year. And of course that is all predicated on the expectation that confidence will return to the economy as the issues around the virus ease sometime in that June quarter. So what about the package? Well, it was a big package, $17.7 billion. That was what I would call a very bold move. And it was targeted on the areas that I think are very important for the economy. That is keeping people in jobs and also helping businesses to get through this shock to the economy. If we don't get these businesses to survive and we lose good companies during this period, the recovery phase is going to be a lot more difficult for the economy. And we know that if people lose their jobs, it's very hard for people to get their jobs back. If you recall, in the global financial crisis, before the crisis, the unemployment rate was 4.2%. It lifted to 5.9% at the peak of the crisis. And now, 12 years later, the unemployment rate is still at 5.3%. So we haven't been able to get back to that pre-crisis level in 12 hard years. The aspects of the package that are important, firstly, there was $4.8 billion to be handed out to people on social security and pensioners, about 50% between the two groups. There'll be a $5.9 billion boost to businesses, and that's really going to work in a way that as businesses collect PAYE tax, only half of that needs to be sent back to the tax authorities, and businesses will be able to get up to about $25,000 for that. There were issues for accelerated depreciation, and most importantly, companies could write down investment up to $150,000 if that investment is made before the end of June this year. So why do we think the economy will still remain in recession? I think the important thing is to look at the two policies that will have the most impact on spending during this June quarter. The first one, the $4.8 billion going to pensioners and people on social security. We expect that given pensioners will be quite nervous about the current environment, given the hit that they've had to their incomes around bank deposit rates, that they'll save about 75% of their payments. On the social security front, of course, they will spend a much higher proportion, but given the issues around isolation that will only build over the course of the next few months, I think that that group will also save probably about 40% of the money they're paid. What about the depreciation allowances? The government pointed out that in 17-18, when those allowances were first used, there was a big boost to investment. But that was a time when business confidence was near record levels and businesses were feeling that they could confidently lift their investment to take advantage of the tax boost. This time business confidence is very low, and this is even before the sort of numbers that we expect to see as the virus impact of the virus spreads further into the economy. So I think that business will be quite cautious in terms of taking advantage of that particular opportunity. So we're not really expecting to see a major boost to business spending from the depreciation allowances. The third one, of course, is money that companies will receive in order to retain workers. That money will absolutely be very important to support workers, but I suspect that companies will be more likely to save that money rather than invest it or rather than employ more people. So overall, we still believe that the economy will remain in recession in the first half of 2020. Let me emphasise, however, that I do support a number of aspects of that package. because what we need to do over the course of the next few months is to ensure people stay in jobs, and we need to ensure that good companies don't disappear as a result of this sharp short-term shock. There will be an expense in terms of spending, which will lead to that recession, but the important point about retaining jobs and retaining companies is the most important issue. And in that regard, we saw a very important initiative from the Bank of England last week, where it reinstituted the policy that it used after the Brexit vote back in 2016, where it is lending money to banks at the cash rate, as long as that money is distributed to small business. I would really hope that the Reserve Bank replicates that policy. It was something that we were promoting strongly last year, and if the Reserve Bank can play their role in that key theme, which is to keep companies going through this difficult period, then we will be very pleased with that approach. Thank you very much.